How about I add myself to the screen first? I'm a terrible producer. All right. We'll pretend we're starting over. Welcome. Thanks for joining, being a part of this here on Thursday morning. So today's show or chat topic, whatever you want to call it, talking about a new product that's out on the market that lets you treat a mortgage as a checking account. So think of it this way: whenever you do a loan, if you get a mortgage, right, you come to me, say, "Hey, Chad, I'm doing 5% down payment, want a conventional loan. You take care of it. What do we need?" And we go through the process. We close the loan for you. Everything's good. And then 2 months later, you make your first mortgage payment. Well, the way that cycle works is you actually make the payment out of your checking account between the first and usually the 15th or 16th of the month without having any kind of penalty on your mortgage. And then it's not reported late, as in your credit report late, until after the 30th of the month. So you make your payment from your checking account. So some of you may get paid the end of the month. Some of you may get paid every other Friday. Some of you, once every 2 weeks, weekly, whatever the case may be. But you take your money and you then log in online, pay your mortgage through an ACH or an auto pay, whatever the case may be. That's how you pay mortgages today. You keep the rest of your money in your checking account, your savings account, and then at that point, that's the money that you use to pay for anything, and make sure you got money to live on for the rest of the month. So that's how that works traditionally. What if we told you there was a product that actually went in reverse of that? Here's what I mean. So, would this work for you? And would you be interested in some kind of product like this, to where every month, or every paycheck rather, your paycheck went immediately, 100% of it, to the mortgage? So if your mortgage payment is $2,000 in a month, you get a $5,000 paycheck. All $5,000 goes to the mortgage payment, which means 2,000 is paid, then an additional $3,000 pays your mortgage down for you, and then you only draw back what you need, whether that's to pay credit cards, groceries, utility bills, kids sports goods, activities, going out for a drink, happy hour with friends, credit card bills, student loans, whatever it may be. You draw money from your mortgage. Would that trick, would that mind trick work on you and switch your habits as a human to paying off your mortgage faster? So let's say you owe $400,000 on a mortgage and your monthly payment is, let's just say it's $3,000 right now. I don't know what that would be, but let's just pretend it's 3 grand. You get a check, it goes directly to the mortgage, and $6,000 is applied. Well, your mortgage gets paid down, and it doesn't get paid down by, you know, there's some interest in there, but let's say it goes from 400,000 down to, say, 396,000. But then you can draw back only what's needed to pay your bills every single month. I think it's more like the math doesn't change, right? Like, it's still a mortgage, it's still an interest rate, you're still paying a bank, you're still doing all these things. All you're doing is tricking yourself in a good way from a discipline perspective. You're just simply taking the full chunk of money and you are applying all of it to the mortgage. But the mortgage is set up a little more liquid than a traditional mortgage, meaning you can draw money back from that mortgage to pay your bills. I just think as human beings that we would have a harder time of pulling money from that mortgage because we may not spend it on things beyond necessities, or we may think twice about what we're spending it on. It's really easy when you have a credit card and you just swipe, 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 swipe. Bill comes due at the end of the month and you make the payment online. This product wouldn't eliminate credit cards, right? Like, credit cards are still going to exist. You're still probably going to swipe them. But are you just going to think about it an extra second, 2 seconds, maybe an extra day, where you go, man, I swipe this credit card. When I pay the bill at the end of the month, the money I have to go get is coming from my mortgage rather than from my checking account. But the only reason that's taking place is because when you got paid, every penny went to the mortgage. And then the mortgage company allows you to pull money back. So basically, would that help you pay things off faster? Would you be more disciplined? Would you think twice before spending? Would you be a little more discretionary on what you spent money on? Would it help with the credit card things? There's a lot of ifs, ands, buts, but it's just a nice kind of refreshing new concept that is pretty cool. So if you would be interested, just even in learning how that would work, what it would look like for you, if it would work for your budget, your lifestyle, if you've been looking for maybe some discipline tactics, and this may be one of them, then reach out to us. You can drop a comment and I'll reach out to you. You can shoot me a DM on one of our platforms, whether it's Instagram, Facebook, Twitter, whatever the case may be, whatever's good for you. Handles This Chat is Real. And also on the YouTube side, we would appreciate anyone who can go in, like, subscribe, and follow. Hit the bell. Notifications will pop up whenever we post or whenever we go live. But it's just a nice, like I said, it's a different concept is all, where the money gets applied to the mortgage first and then you draw money back as needed. So thanks for listening into the soapbox for 6 or 7 minutes. Sorry for the screw up at the beginning. Hope everyone's doing well. And we will be back on tomorrow for a few minutes. It'll be a little different because we'll probably go live on our route to Tuscaloosa. Big Alabama-Tennessee game coming up this weekend. So everybody have a good Thursday. We'll talk to you soon.